Everybody, I'm Tasha with the Major Change Group. Let me know in the comments, are you looking to apply for a new credit card? If so, let me know what credit card you are wanting to apply for because I'm always looking for a new credit card. But when we are looking to use our credit, that can be for a new credit card, an auto loan, even getting a house. We want to make sure that our credit score is high, especially for those credit cards, so we can get those high credit limits. Now, when we're taking a look at our credit utilization, this can be for all of your debt. But in this video, we're going to really focus in on credit card utilization. And I want to know, do you think you should have 10% credit utilization or 30% credit utilization? So when we are taking a look at our profile, we want to take a look at the 5 components of our credit score. And those components are our payment history, our credit utilization, our length of credit, our new credit, and our credit mix. And you can see that 65% of our credit score is made up of our payment history and our credit utilization. Now, the only thing is, if we get those late payments on our credit profile, it is really hard to increase your credit score just by starting to get good payment history, because it usually takes about, I'll say, between 2 to 3 years after you get late payments on your credit profile for your credit score to finally increase. But it is going to stay on your credit profile for at least 7 years. So that's why I say, by tackling your credit utilization, especially your credit card utilization, this is going to be the easiest way for you to be able to increase your credit score fast. Credit utilization, especially for our credit cards, how you want to do this is you want to start by getting how much you owe on that credit card divided by your credit card limit. And so in this example, let's say you have a $10,000 credit card and you owe $5,000 on the credit card. So that's going to be 50% credit utilization on that card. And I got this information from the Experian website because y'all already know I love the Experian site. So most of the information that I'm going to be using today is from the Experian site. So when we are taking a look at our credit card utilization, what you want to do first, you really want to check your credit. And so I check my credit on the Experian site, but I also use the Chase portal and I check my credit card utilization there. But you can also pull up your whole credit profile and see, all of your credit cards and all of the debts that you owe, and just check out your whole credit profile. And so then you want to check your revolving utilization. So for each of your credit cards, you can take a look to see how much you utilize, but then also you can take a look at your overall credit utilization. So you want to check the balances on those accounts as well. So you'll have to let me know in the comments, do you take a look at your credit utilization per credit card or for your overall utilization? And I look at both, because usually for me, I'm going to want to be 10% or less on my utilization, because when we're taking a look at our credit utilization, it states 30% or less. You have over 50% utilization on your credit cards, you might want to try to take it down to 30% and then see how much that increases your credit score. And then after that, take it down to 10% and then see how that impacts, and really kind of play around and see, how it really works for you. But I would say for me, having 10% or less is going to be a sweet spot for me. And so what I do, I had recently got 2 credit cards in January. And when I was taking a look at my Citi Advantage Platinum credit card, I want to say probably like 20% utilization for that credit card, because I didn't, even though I was making payments on it, once it reported to the credit bureau, it reported like 20%. And I was just like, whoa. But even though it had reported 20% for that credit card, my overall utilization probably ended up being like 2%. So it took me up to 2% utilization for all of my credit profile, even though that one credit card had 20%. So that's how I kind of take a look at it. So when you are checking your credit, you can always go over to the Experian site, and on the site they have this score ingredient. And so it's going to break down all 5 components of your credit score. And so you can see here you have your payment history, and it says the amount of debt, but that's going to be your utilization. So if you click on the it'll take you and it'll break down each part of the utilization. So first it's going to say what is your percentage of your revolving credit. And so here is stating that for your overall revolving credit, you really want to have 7% or less for higher achievers. So that's why I say really 10% or less, that's going to be the best. But here on the Experian side, it's going to say 7%. And then it says the number of accounts with a balance. So here is stating that really you don't want to carry a balance on more than 3 accounts. And so I was just like, whoa. So you'll have to let me know in the comments, how many credit cards are you leaving a balance on? Like for myself, even though I have 14 credit cards, I don't carry a balance on all 14 of those credit cards. Usually per month, I will usually have like 1 to 2, maybe up to 3 credit cards that are my daily drivers that I'm using. And so right now I'm using my American Express Gold card again, and I'm using my American Express Hilton Honor Surpass as well. So those are my 2 daily drivers. And so next, if you find that you have high utilization on your credit cards, or just really overall, I think that it's great to have a budget. That way you can know how much money you have coming in compared to how much money you have going out. And I want to give a shout out to Water Your Soul because he had a video and it was pretty interesting where he was reading this article and it was stating that people will have where it auto pays on their credit card, but only for the minimum balance. So then that means that people are paying interest on credit cards. And so I was just like, whoa, that's pretty interesting. And so really you want to make sure that you are not necessarily overspending, because especially with the interest rates being so high, because I know for my American Express Gold card, I believe my interest rate is like 26%. So, paying interest on credit cards is really not the way to go. But then next, what I also like to do is I like to use a credit card utilization hack where I am using a credit card, a few of my credit cards, and then I will let a balance report to the credit bureau so that I can show usage on that credit card. But after it reports, I will pay the credit card off, because this is very helpful. And I did a video before where I was talking about, should you have 0 utilization on your credit cards? Because really that's how I feel like Bank of America had closed 2 of my credit cards, because I was not using the credit cards and they ended up closing it. And so after that, after it happened the second time, I tried to learn my lesson a little bit, and I'm getting better at rotating the credit cards. And then I do have some cards that have a auto pay for, let's say, like my cable bill and some of my other bills. That way it just auto drafts off of the credit card. But especially having 14 credit cards, I don't have, I'm not using all 14 all the time. So that's one thing, trying to make sure to use all the credit cards. But I've gotten a little bit better about it over the years. But let me know in the comments, how are you rotating your credit card so that you can make sure that you're showing usage on credit cards? Because I also know when I had applied for the Chase Sapphire Preferred card, I technically, it's like they had denied me, but then they had went ahead and approved it, but took $5,000 off of one of my other credit cards. It was either I want to say it was my Chase Southwest card. And so then I had got approved for $5,000, but in the letter it stated that I had low usage on the other credit cards, because really I wasn't using those credit cards and I wasn't reporting a balance to the credit bureau. So it looks like I really wasn't using the cards, although I'm using the cards. But if I'm not letting it report, then that's where it really show low usage. So especially if you are applying for credit cards, especially with an issuer that you already have, you might want to put those credit cards in the mix. That way you can start letting it report a little bit to the credit bureau so that they can see usage on there. But overall, let me know, what are you thinking in the comments? I really think that having 30% or lower, especially if you have maxed out credit cards, that is really going to help to increase your credit score. But I really think the sweet spot is going to be 10% or lower. And then we see from experience, they're saying 7%. So that's what I'm saying. I think anything less than 10% is good. But see, the overall point that I feel, even if you are reporting to the credit bureau, it doesn't mean that you have to pay interest on the credit cards. Because for me, especially really since I'm using the credit cards for the points and the cash back and all that kind of stuff, I don't want to pay interest on the credit cards, because really, if you pay interest on credit cards, but then you're using the points, it's like really you kind of break even. So it's best to, if you are using a credit card for points, to pay the credit card off. And then that way you're really getting the benefit. So let me know in the comments. I hope that this video was helpful. Please like, subscribe, share with a friend, and turn your notification bell on so you will be notified when new content drops. I thank you so much for watching. Until next time. It's not a game, sir.